The effect of tax and inflation must be considered when analysing the returns from an investment. Paying tax to governments helps fund things such as infrastructure and welfare within a country. Some of the main types of taxes you might have heard of are individual or residential income tax, corporate tax, goods and services tax, and capital gains tax. Different tax rates are applied for each of these. In this video, we'll focus on individual or residential income tax, which is calculated using tax brackets. We'll look at the effect of tax on an investment and some examples. In another video, we'll look at the effect of inflation. When you earn interest from an investment, such as interest on a savings bank account, it's treated as income and you pay tax on it. Tax is a way for the government to raise revenue for things such as infrastructure projects and welfare. Tax is paid by people or individuals and businesses. Tax is paid on income, but also goods and services. This video focuses on income for individuals. People and businesses submit income tax returns. People and businesses pay tax at different rates. Tax rates depend on the type of entity you are, that is, if you're an individual or a business. Tax impacts returns on investments, which is why it's important to consider it during an investing topic. These income tax rates show the amount of tax payable by people or individuals for every dollar for each income tax range or bracket. These rates apply to individuals who are Australian residents for tax purposes during the 2019 to 2020 financial year. Whilst these rates and income brackets may change, the concepts in this video don't and can still be applied if the rates or income tax brackets change. For amounts less than $18,200, no tax is paid, so 0% on amounts less than $18,200. For amounts between $18,201 to $37,000, 19% tax is paid. That means 19 cents for every dollar over $18,200. Between $37,001 and $90,000, 32.5% tax is paid. So that's $3,572, which is the amount of tax paid at 19% up to $37,000, plus 32.5% of amounts above $37,000. Between $90,001 and $180,000, 37% tax is paid. So up to $90,000, $20,797 tax is paid. Then you pay 37% on amounts over $90,000. Above $180,000, you pay $54,096 tax plus 45% for amounts over $180,000. Let's look at an example. Your salary is $95,000 per annum. An investment you have earns $3,560. During the financial year, how much tax is payable on the investment? What's the after-tax return on your investment? First, we need to calculate what the total income is to identify which income tax bracket you fall into. That is salary plus investment income. That's $95,000 plus the $3,560. The total income is $98,560. Your total income falls into the $90,001 to $180,000 income tax bracket, and the highest marginal tax rate payable is 37%. The tax payable on investment is 37%, so we calculate $3,560, which is the amount we earn on the investment, times 37 on 100, which is converting the percentage into a decimal. And we get tax payable on the investment is $1,317.20. The return on the investment after tax is $3,560 less the tax we've just calculated. So take away $1,317.20 and we get a return on the investment after tax is $2,242.80. Let's look at another example. You get your first job with a salary of $40,000 per annum. In addition, your savings account is expected to earn $500 interest during the financial year. How much total tax is payable? What will your net income be? The difference between this example and the last one is that we're calculating the tax on the total income and the total net income. The total income is the salary plus the investment income, which is $40,000 plus 500. So a total income is expected to be $40,500. The total income falls into the $37,001 to $90,000 income tax bracket, and the highest marginal tax rate payable is 32.5%. Tax payable is $3,572 plus 32.5% of amounts over $37,000. So we work out how much income we had over $37,000, which is $40,500, take $37,000, which is $3,500. Now we calculate 32.5% on the $3,500. We're converting the percentage to a decimal by dividing by 100, and we get tax payable above 37,000 is 1,137.50. Now the total tax payable is the $3,572 plus the amount that we have calculated above 37,000, which is $1,137.50. So the total tax payable is $4,709.50. The net income is the total income, take away the tax, so you're $40,500, take away $4,709.50, and the net income, this is your take-home income, is $35,790.50. Here we have another example. This time Riley has $35,000 to invest in a term deposit at 2.4% per annum for 12 months compounded monthly. Riley's income from all other sources is $55,000. That might be his wage, it could be his salary or something else. What interest is earned on the term deposit? How much tax is payable on the investment? What is the net income on the investment? First, you must calculate the interest on the term deposit. So we're going to use the compound interest formula to find the final value or future value of the investment first. Remember, P is the principal, R is the interest rate as a percentage, K is the number of compounding periods per year, and N is the number of years. We substitute our known values into the formula, and I've color-coded those to make it a bit easier for you. And we simplify and we figure out what the future or final value of the investment is. And in this case, it's $35,849.30. The interest earned on the investment is the amount we've calculated here, less the principal. So we take away the $35,000 from this amount, and the interest earned is $849.30. Now we're going to work out the total income, which is the salary plus the investment income. So $55,000 plus our $849.30 earned on our investment. The total income is $55,849.30. Total income falls into $37,001 to $90,000 income tax bracket, and the highest marginal tax rate is 32.5%. Tax payable on the investment is the $849.30 times 32.5 divided by 100 to convert 32.5% to a decimal. And the total payable on the investment only, not the total income, is $276.02. The return after tax on the investment only is your $849.30 interest earned, take away your tax, which is $276.02. So the return after tax on your investment only is $573.28. And that's it for this video. Thank you.